Here's a detailed summary of Apple Incorporated's Q2 fiscal year 2026 earnings call transcript, suitable for reading aloud. Good afternoon, everyone, and thank you for joining us for Apple Incorporated's Q2 fiscal year 2026 earnings conference call. Today, we have Tim Cook, CEO, and Kevan Parekh, CFO, to discuss our financial results and outlook. We begin today with some significant news regarding leadership. Tim Cook, our esteemed CEO for 15 years, announced his transition to executive chairman effective September 1st. He shared his immense pride in Apple's impact on users' lives and expressed deep gratitude for the company's teams and shareholders. Tim highlighted the strong performance of the first half of fiscal year 2026, with double-digit growth and an incredible product roadmap as key reasons for this opportune transition. He expressed his absolute confidence in John Ternus, who will be stepping into the CEO role, describing him as a brilliant engineer, a deep thinker, and a natural leader. Tim will be working closely with John to ensure a smooth handover and will remain a dedicated supporter in his new capacity. John Ternus, who will assume the CEO role, echoed Tim's sentiments, expressing his profound gratitude for Tim's trust and confidence. He emphasized that the thoughtful, deliberative, and disciplined approach to financial decision-making, a hallmark of Tim's tenure, will be continued under his leadership. John conveyed his excitement about Apple's future, calling it the most exciting time in his 25-year career at the company, with an incredible roadmap ahead and numerous opportunities to seize. Financial highlights for Q2 fiscal year 2026. Apple reported $111.2 billion in revenue for the quarter, marking a 17% increase year-over-year, and setting a new March record, exceeding the high end of our guidance. This strong performance was achieved despite supply constraints. Revenue, $111.2 billion, up 17% year-over-year. Earnings per share, EPS $2.10, up 22% year-over-year, a March record. Gross margin, 49.3%, which was above our guidance range and up 110 basis points sequentially. Performance by product category. iPhone. Revenue reached $57 billion, up 22% year-over-year, setting a new March record. The iPhone 17 family has been exceptionally well received, with significant customer enthusiasm and market share gains. Mac. Revenue was $8.4 billion, up 6% year-over-year. The latest Mac lineup, including the new MacBook Neo, has seen strong demand, particularly from upgraders and new customers. Mac is positioned as a leading platform for AI due to Apple Silicon. iPad. Revenue was $6.9 billion, up 8% year-over-year. The M4-powered iPad Air has raised the bar for performance and versatility on the iPad platform. Wearables, home, and accessories. Revenue came in at $7.9 billion, up 5% year-over-year. Apple Watch continues to be a vital tool for health and well-being, while AirPods are enhancing audio experiences and communication with features like live translation powered by Apple Intelligence. Services. Services revenue set an all-time record of $31 billion, up 16% year-over-year. This growth was broad-based across developed and emerging markets, with record revenues in most services categories. Apple TV Plus continues to be a powerhouse for content, and streaming for sports like Formula One and MLS is expanding. Geographic performance. We achieved March revenue records and experienced double-digit growth in every geographic segment. This includes strong double-digit growth in Greater China and the rest of Asia-Pacific, as well as in India. Growth was robust in both developed and emerging markets. Key management statements. Tim Cook, CEO. Tim Cook expressed immense pride in Apple's 50-year journey and its impact on users' lives. He highlighted the current strong performance and an incredible roadmap as key drivers for his transition. He stated, I will always be proud of the impact Apple Incorporated has had on our users' lives, and I cannot begin to express how grateful I am for our amazing teams. It is because of them that there is no company like Apple Incorporated, and I truly believe there never will be. Regarding the future, he added, I am incredibly optimistic about Apple Incorporated as future, and I know we have the right team in place to deliver on the promise of this company. Kevan Parekh, CFO. Kevan Parekh detailed the strong financial results, emphasizing the record revenue and EPS. He noted that foreign exchange provided a tailwind of approximately 2.5 percentage points to the growth rate, and that supply constraints on iPhone and Mac were factors. He also highlighted the significant increase in operating expenses, partly due to a one-time expense. A notable shift in capital allocation philosophy was announced. As we move ahead, we are no longer providing net cash neutral as a formal target, and we will independently evaluate cash and debt. Capital returns will continue to be important to our overall approach by delivering long-term shareholder value. The board has authorized an additional $100 billion for share repurchases, and the dividend is being raised by 4% to 27 cents per share. Management's forecast for future quarters. For the June quarter, Apple expects total company revenue to grow between 14% and 17% year-over-year, accounting for constrained supply. Services revenue to grow at a year-over-year rate similar to what was reported in March, after adjusting for foreign exchange tailwinds. Gross margin to be between 47.5% and 48.5%. Operating expenses to be between $18.8 billion and $19.1 billion. Other income and expense, OI&E, to be around $250 million. Tax rate to be around 17%. Significant risk factors, macroeconomic conditions. The outlook assumes the global macroeconomic outlook does not worsen. Tariffs and trade policies. The guidance assumes current global tariff rates, policies, and their application remain in effect. Supply constraints. While demand is strong, supply constraints on components, particularly for advanced SoC nodes, continue to impact product availability, especially for Mac models in the near term. Memory costs. Management indicated that memory costs are expected to drive an increasing impact on the business beyond the June quarter, with a range of options being evaluated. Legal and regulatory proceedings. As always, these are ongoing considerations. Highlights. Record revenue and EPS. Strong double-digit growth across the board, exceeding expectations. Exceptional iPhone performance. 22% year-over-year growth, driven by the highly successful iPhone 17 family. All-time record services revenue, demonstrating continued strength and diversification. Double-digit growth in all geographic segments, particularly strong performance in Greater China and India. Successful product launches. MacBook Neo and new iPhone, Mac, and iPad models are resonating strongly with customers. Significant capital returns. $100 billion authorization for share repurchases and a 4% dividend increase. CEO transition. A well-planned and optimistic leadership change with a strong successor in John Ternus. Apple Intelligence integration. Deeply woven into the platforms, offering powerful, personal, and private AI experiences. Lowlights, or areas of caution. Supply constraints. Continued impact on product availability, particularly for certain Mac models in the June quarter. Rising memory costs, expected to be a significant factor impacting the business beyond the June quarter, with potential margin implications. CEO transition. While optimistic, any major leadership transition inherently carries some level of uncertainty. In summary, Apple delivered a robust quarter driven by broad-based strength in its product and services portfolio. The company is navigating supply constraints effectively while seeing exceptional customer demand. The announced leadership transition is viewed positively, with confidence in the future direction of the company and a continued commitment to returning capital to shareholders. We will now open the call to questions.